I've spent the past week trying to figure out why the stock market went up the way it did. I will bring you all of that data here today. You came here for the truth, so let me unveil that for you. I found some interesting information and it goes right into the depths of exactly why the stock market went up. You might be surprised. I'm going to get into it right here. I don't want to waste any time. Let's dig in. Looking first at this, you'll see articles left, right, and center saying the stock market is edging toward extremes of Great Depression and dot-com eras. When we look at this, you look at several indicators. Yeah, they're all out of whack. We know that. Is the stage set for a year-end rally? We look at the other end of the equation. Yeah, the boom is going to last forever and ever. But what's the data? Like, why did the stock market go up in the first place? Here it is. AI-related stocks drove virtually all of the returns of the S&P 500 this year. Can you believe that? A handful of stocks are carrying this market. That's the beginning. That's one thing. Well, what about this? 7 largest companies as a share of the S&P 500 total market cap has accelerated beyond what we saw in the year 2000. The 7 largest companies, we never seen this before. Because during that time, other types of companies were also worth stuff. Now that's not the case. Can you believe that? Oil and all these like huge companies, they do not make up a large percentage. People don't even care anymore. Investors don't care. They are all hopping onto the same bandwagon, and you'll see it here. The contribution from the top 10 S&P 500 stocks. Year to date, never seen like anything like this. Okay, the gains are all in those top 7, top 10 stocks. And we have to ask the question, who's buying? Well, everybody's buying, but in this case here, the CTAs, we're looking at basically computer algorithms, they bought a record amount in a 10-day period. We had never seen anything like this before in history. That's one. Can you guess who else has been buying? Well, of course, retail. They've always been buying tech stocks, nothing else. But this. Corporate client buybacks as a percentage of the market cap is above seasonal trend for the second time since May, and this week's inflows is the second largest in our data history. Go back and you'll see this. This chart goes back, way back, and you're going to look at this since 2010. Well, back-to-back weeks have had the most buybacks ever in history. That means companies buying their own shares. We have never seen this much happening ever. 2 weeks in a row. 2 weeks in a row. So the companies are buying their own shares, as well as the computer algorithms, which basically means, vastly like the majority of stocks are being traded by computer algorithms. That's who's buying. That's where the surge is coming from. And it's all in a handful of stocks. Now that right here, seeing companies buying back their shares, that pushes the stock price up. Of course, there's compensation associated for the CEOs and directors. So that is a good thing for them. But at the same time, when we see a smaller and smaller group of stocks getting all the attention, getting all the gains, is unhealthy. It is unhealthy. Now, I'm not necessarily saying it's going to crash or anything. What I'm just saying is it's an unhealthy trend. We want to see the other stocks getting purchased up as well. Oh, there's a lot of breadth in the market. Oh, that's good. That's healthy. That's great. Investors continue to add to tech funds. And you could see the insatiable appetite for tech is unwavering. That data is shown right here, and we get that from what's called EPFR. Over the years, I have highlighted that information over and over and over again. They have all the flows, data flows. Biggest 2-week inflow to equity funds since February of 22. So there's just so much money flowing in from every single direction, from foreigners, from domestic, coming in from the hedge funds, coming in everywhere. All right. This just shows us the shorts. So looking at this, you can see the data for yourself. But which companies are being shorted right now? It should not surprise anybody. Tesla at the top of the list. Okay. There are others in here like ExxonMobil, Chevron. So the belief is that, the prices went up too far. These stocks are now overvalued. But what's on the other end of the spectrum, right? You'll see that in a sec. Hedge fund crowding has risen as popular positions have gained momentum. Looking at where, of course, the tech stocks, yet again, they're winning with hedge funds. The most popular hedge fund long positions have outperformed the most concentrated shorts in most sectors year to date. Yeah, everyone's going long. Nobody's going short right now. Nobody is shorting this market, and rarely ever do we even see shorts. It's such a small percentage because they know the way this market works. It's addicted to the easy monetary policies, and they're just begging and pleading the Federal Reserve to reverse trend so that this thing can go to the moon, as if it hasn't already hit all-time highs or close to it in many cases. Very important positions to hedge funds. Where are all the longs? Where are all the purchases? Right here, Microsoft on the top of the list. You can see it. Everybody owns Microsoft stock. And now with what's going on with OpenAI, it has made that even more attractive, not less attractive. This is unbelievable. People are buying into the AI, whether you think it's hype or not. But that's what's getting the attention. That's where the money is going. Computer algorithms are doing it. Hedge funds are doing it. And like one after the other, every bit of data is showing this. It's AI, it's tech. They're getting the attention. Okay, look down the list. Microsoft, Amazon, Meta, Alphabet, Nvidia. And then we go down to Uber, which is odd because Uber's entire business model relies on the fact that they're going to be getting self-driving. That's how they don't make money. It's all because of the self-driving, which has shown to not be close to ready yet. But anyway, that's a lot of speculation, right? And then we have, of course, Apple on that list too. And then you go down and down and down. Well, that tells us where investors really believe. And they're clearly suggesting that the tech stocks, NASDAQ, as you see, is the place to be. That growth is going to be there. You could see that it has come up significantly from that dip that it took. When I talked to everybody, I told everybody on this channel multiple times, you can go back and look at the posts or community section of this channel. Actually in September, I was saying, hey, looks like October could be at least a near-term bottom right now while everybody was bearish. I was like, yeah, you know what? Looks like it could be that. Then like a week or two later, I kind of made a similar post saying, hey, this is it. The pivot's coming. And the pivot is like not actually cutting interest rates, but referencing essentially the idea that, okay, we're getting to the end of this. And that was it. The expectation was, wouldn't be long before they started to, and of course, stocks lead. They always lead. They go in front of this. And so that's what we have seen so far. Stocks have made their way to either all-time high or near all-time highs. Okay, so my accuracy on that has been just because I pay very close attention to what happens with the central banks. I've read the history, so I can be able to do that. And guess what? Money mirror method, something that I just coined the term, but looking at that and seeing overwhelmingly how much liquidity had been in the system from before, it shows us very, very clearly where we've been at. And it's been so accurate. And that's how I was able to determine that. If you want to know more about this, go down in the link in the description under the mentorship. I give everybody on my Friday session a weekly update on the money mirror method. Okay, I can't do that on this channel because rarely I do. It just doesn't make sense for that. And look, if you want the really good information, you can get that with Seeking Alpha, because they have, like, when you go behind the paywall, yes, you're paying, I get that, but you're not worried about algorithms. Articles, when they're written, they're always like SEO optimized, and the actual real data is not there. You want to be able to pay hopefully a small fee to get the best information you possibly can. Seeking Alpha discount right now. If you want it, click the link in the description right at the top over there and get some good stuff. I've had great feedback. And when you get inside, this is what it looks like. This is the trending news. You can see the trending analysis. They have quant ratings. They've got everything you could want. That's kind of what it looks like. So you can just pause it right there if you want to just see that for yourself. But it's some good stuff that I'm constantly referencing just to keep an eye on the information. I don't like CNBCs and Bloombergs where they're kind of just, Yeah, they're quick in their stuff, but they're not giving analysis, and that's the difference. Okay. Comment of the day. Thank you very much. No matter what happens, I guarantee that the wealthy elites will always get their money. There's no question about it. No question, because that's how they run the system. And how do they do that? With a deflation? I don't know. We didn't see any deflation. Haven't seen it yet in this cycle. They do it with inflation. That's how they create a divide in between the haves and the have-nots. And they're doing that right now. And my goodness, I worry about what's coming in the near future. If you want to pay attention to all that, you want to get the latest and greatest, just hit that thumbs up button, because that tells the algorithm you want to know more about this. If you leave right now, you're not going to tell the algorithm about it. So you got to hit that. It supports me at the same time. And I do appreciate that very much. I want to see you here tomorrow, and I want to see your comments, because that's how you notify me of what you want to know. So please let me know. Your suggestions are always welcome. I'll see you tomorrow. Take care.